Good morning, everybody. Thank you for joining us. Today is Thursday, April 8th of 2021. We're here to discuss the riveting topic of the New York data call of 2020. I know everybody's excited to join us. I'm proud to present here at Security Title, Catherine, Joe, and John to deliver this message here for you. Just a few housekeeping items. Attendees are in listen-only mode, so if you have any questions or comments, feel free to use the questions box and chat box accordingly. We will carve out some time at the end of the presentation to address any questions. And if we run over on time, we will definitely make sure that any questions submitted to us will be answered separately and directly. Without further ado, I'll kick it off to Catherine.
Good morning. My name is Catherine Canino. I am the New York State Counsel for Security Title, and I am here today to talk to you about that legalized form of industry torture known as New York data call. Many of you are familiar with the annual ritual, but for the few that aren't, I'm going to take you through the concept of data call, and then we'll go into more specifics with John. What is New York data call? There are two purposes. One is for the state and one is for us. We do have a purpose ourselves to use this. New York State Department of Financial Service purpose is to get a snapshot of how the industry is doing, the health of the industry. They want the data directly from us of our financial situation so that they can make decisions to better regulate the market. What's our purpose? We do have a purpose for this. Our purpose is to set rates and test rate adequacy. TIRSA has actuaries that maintain the history of these data calls and see if there is room to set a higher rate in the future by the numbers that we present to New York State. So it does have a purpose for us, and that is why we need it to be accurate, is that this is our chance. This is our statistical data that we would use to make the rates higher. And New York State would have these rates and this information and say, okay, we would allow you to have these higher rates. So that is our purpose, and that is why we need this to be accurate. It's not just for the state, you know, they're testing our health of the industry, but it's also for us so that we can justify higher rates in the future. What is included in a New York data call? Data call includes all title insurance related income and expenses that an agent or underwriter incurs in a year. It doesn't have anything to do with settlement activities or attorney activities or anything outside that you do. It's only the title insurance income and expense that goes on your data call. Income includes title insurance income and non-title insurance related income. So it's title insurance income, meaning the premiums, the endorsements, anything that is directly related to the title insurance policy, and then all the things that are not related, like recording fees, survey fees, departmental fees. All this has to go into the data call so they have an accurate snapshot of what we're doing. And income and expenses are only for the activities that are related to New York. This is a New York data call. They only want to know about our New York activities. If you are in another state, you will have other data calls possibly in your other states, or you will have to carve them out to not include them in the New York data call. This year it's a little different because of the pandemic. The data call is including income from the Paycheck Protection Program loan. They want to know if any of you have been receiving funds from this program and they are counting that as income on the data call this year. Okay, what's new in 2020? There haven't been that many changes. Next year they're expecting to overhaul this a bit. But this year we did a few things and they had asked for a few things, and these are the concepts that we have to deal with this year. When TIRSA submitted the data call for approval to the state came back with one more requirement, and that is the top 5 salaries. The DFS requested this new section to be added, and you'll find this in Part 3. In Part 3, you will have to put the top 5 salaries of your company and the the position of the person that received that salary. These salaries will also be included in your salary section, but they want these particular top 5 salaries put separately on Part 3 as well. There's no personal information that's required in this section except for the title of the person and the salary amount. So it's anonymous. You do not have to say who gets these salaries. The next one is a happy little feature that is coming to this year is consistency checks. This is for figures that have to go in more than one place. Sometimes you have to put advertising in on this sheet and that sheet. What this consistency check shows, and John will go into it a little bit more later, is it compares the lines that these items have to be on to make sure they're identical. A lot of this is a good feature this year because a lot of when we kick back these data calls for amendment, consistency is a big issue. Putting different figures on different lines when they should be identical causes a lot of problems for review on the various levels, and the data calls are required to be kicked back to be fixed. With these consistency checks, this is going to drop this dramatically because you will see right in front of you, and this is auto-populated, where your inconsistencies are and fix them before it even gets to us. So that is a very good feature. The last thing in 2020 that changed is expanded expense categories. TIRSA gave, from industry feedback, TIRSA gave these expanded expense categories to DFS because it's the way we do business. The data call as it was did not particularly have expenses the way we incurred expenses. So the expense categories were expanded to make it easier on all of us to fill out the data call. Okay, important considerations when preparing data call. The first thing is use cash basis over accrual basis accounting. If someone doesn't know what that means, it means only include the revenue and income from transactions that closed in 2020 and the expenses that were paid in 2020. We all know we have spillover between December and January of each year as to what got paid in, what got incurred in the prior year and what got paid in this year, et cetera, et cetera. You have to use only what is in the brackets of 2020 in your data. The other thing to consider is allocations. Income and expenses must be allocated between zones. Your zone 1 transactions should be cut out into the zone 1 column, and the zone 2 transactions should be cut into the zone 2 column. Between states, if you're in more than one state, as I said before, you are only doing New York. You're only doing your figures for New York and your New York data call. Another allocation is between title insurance and non-title insurance activities. You are only to include in data call anything that is directly related to the issuance of a policy. So non-entitled insurance activities shall not be put in your data call. And there's also the difference between salaried activities. The salaries that you receive from your own activities. If you have a law firm, if you have a mortgage lending service, if you have title insurance, you may receive one paycheck, but you must put only your title insurance salary within the data call. And each underwriter must be allocated its proportionate share. If security is 70% of your income and another underwriter is 20% and you have a third underwriter that's 10%, you must take that 100% of your income and put 70% on security sheet and 20% on the other underwriter sheet and 10% on the third underwriter sheet of that total amount of expense or income that you are doing. So it must have its proportionate share of just that underwriter on just that underwriter sheet. If you have 3 underwriters, you're doing 3 data calls. So that is the allocation you must have. something to consider when you were preparing these. Also, some more considerations are zone differences. For Zone 1, the title insurance premium, as we know, does not include the search and abstract fees. Those fees are going to be a separate charge, and the income received by the agent for his work should be included on lines 7 through 10, but the expenses would not be included. In Zone 2, the title insurance premium does include the search and abstract fees within the rated title charges, and therefore they are included within the 1 through 6 lines. And expenses related to this revenue are included in the data call. So you have to figure out per zone what you charge on the transaction, and you're only going to put the premiums for Zone 1, but not the abstract fee, and the premiums for Zone 2, which include the abstract fee, accordingly. It is crucial that agents only include expenses that correspond to lines 1 through 6 of the data call. You're not going to have anything else that does not belong on the data call that are non-insurance expenses. Okay, now the next category is a big one, and this is another reason that data calls get kicked back a lot, is uncategorized expenses. Part 3 of the data call is traditionally used for those expenses that don't really fit anywhere else in the categories that are given. That is part of the reason why expenses were expanded this year, was because there were too many uncategorized expenses. You really should try not to use this section at all, because the state is going to scrutinize more heavily any expenses that are thrown on this page. They want to see it in a particular category because they want to make this as easy as possible for them to see what the expenses are. If you put an uncategorized expense on Part 3, it's not going to be good. They're going to look at it more closely. You should try to just put something in other parts of the data call so that they're not there. We kick back a lot of data calls, and if you don't want that to happen, we kick back a lot of data calls because we see expenses on this page that can fit somewhere else. So if you want to just do this once and not have to worry about us knocking on your door saying, please amend this because this does fit in advertising or this does fit in marketing, then try to have Part 3 as empty as possible. So we will return for amendment any data call that uses this if we find something that's on it. So try not to use that one because the state's really going to look at this one. All right, those are the considerations that we have generally in preparing the data call. And now I'm going to turn this over to Joe about some information about the data call.
I don't have that much to talk about, but what I have to say is very important. We just released a data call and we sent it all out with the income already filled in to the agents. If you did not receive it, please let one of us know and we'll make sure you get it. The hard deadline is going to be May 26th, 2021. We need that information then so we have the ability to compile it all together and submit it in. Consequences for not submitting the data call. Inaccurate information will affect rate increase ability in the future. So basically, we need you guys to do your best to get this as accurate as possible while staying still within that May 26th deadline. Pursuant to Regulation 208, all underwriters and agents are required to report financial information through the New York Data Call. Consequently, all underwriters are required to report non-responding agents to the New York State Department of Taxation and Finance. We don't want to have to do this. If we have to report our agents, they could get a call from DFS or a suspension of their license. We don't really know what the consequence could be, but it definitely won't be good. You do not want DFS calling you because you did not fill in the data call. We know this is a pain in the butt and no one likes to do it. Underwriters don't like to have to deal with it either, but none of us have a choice. So we have to just get it done again by that hard deadline of May 26th. Now I'm going to turn it over to John to go on further.
Okay, one comment regarding what Joe just said. We need, if people do not report the data call to us, we relay that information to the DFS, each agent will be named specifically as not reporting their data call information. So the DFS will not just have the fact that agents are not reporting, but specific names of specific agents will be on that list. So again, it's very important for you to make sure that you complete the data call and send it to us. All right, can you move to the next page? Okay. Now, what to watch for in the income section? Line 8, we're going to be going through some of the lines for income and expenses specifically here, because in the past, people have specific questions regarding where to put specific income or expenses. So line 8 is section 2G related income, meaning section 2G of the New York State the TURSA rate manual, which you can refer to if you like. These charges include receipt of the application for examination of title, which may involve additional tax lots, multiple chains, land underwater, land in bed of streets, rights of way, et cetera, et cetera. You can read this for yourself. Basically, this is income that you should include, but not as direct title income, but as title-related income. Okay, line 9, all discretionary charges on the title bill not included in lines 1 through 8, namely departmental charges and things like that, things that you are expensing and for which you charge that are not title insurance, but searches. So these are the items that usually will go into lines 8 and 9, so you're clear what kind of income should go in those lines. Next slide. Okay, so you can see we kind of indicated here what the title insurance income and non-title insurance income would look like on the data call, with little sidebars as to what we will not, what it should be included. So basically we have for special charges, you can see on the sidebar, those are items that are title insurance kind of, and for which you make charges that should be included as title insurance income. As far as lines 7, 8, 9, and 9, we have other income. Basically, line 7, closing and escrow income. That's pretty self-explanatory. Line 8, 2G related income. That would include, as I said, additional tax lot searches, that sort of thing. Land underwater, rights of way, driveways, easements, strips and gores, things that you're doing searches for that you could charge extra for, and those would be put in that line item. Other, line 9, is the section that you would put, departmental searches, bankruptcy searches, that sort of thing. Okay, next item. Next slide. Okay, lines 12 through 19. This includes 1099 employees, independent vendors, and additional title insurance services. Let me just get to something here. Oops, that's not what I want. Okay, so one thing that I don't think was stressed with respect to salaries, for instance, was the fact that salaries should include not just actual, W-9 salary type things, but also commissions, bonuses, those kinds of items that sometimes confuse people when you just use the term salary. Those should definitely be included in those line items. Lines 23 and 24, which are office space and expenses. Line 23, you will use if you are renting your office space, include your expenses for that. In line 23, if you own the real estate in which you are, using your office space, then you will use line 24. Line 28, you must deduct the percentage of expense attributed to an attending employee at any marketing event. So if you have a golf outing or whatever, you have some kind of an event, if employees are attending that event, that percentage of the expense that you incur with respect to that event for which employees are involved, you need to separate that out and put it in line 28. That seems like something you probably have not been doing and probably should be doing. Now you will be having to do. Okay, part 3. All agents must have the top 5 salaries. This has gone over. You should attempt to classify all other costs under applicable categories in part 2 rather than use the balance of part 3. So really part 3, you shouldn't, like I said before, part 3, when you're including the salaries of the top 5 employees, if you have 5 employees, if you don't, then just the top employees, you should include salary, commission, bonus, draw. Any of those items should go there for those employees, and obviously it should not exceed the amount you're putting in lines 10, 12 through 19 for employee for salaries. Okay, next one, next slide. Okay, 1099 employees. Line 12, legal counsel. This should include not what you would think it would include. Honestly, it should include things like if you retain an attorney to perform a service for your title company, that would go there. Closer fees, obvious. Abstract fees, pretty obvious. Recording and recorder expenses, survey expenses. Okay, that would be if really very little should go in there if you are just passing along the cost of a survey to your client. So what you would include there is the payment of inspectors for survey inspections, that kind of thing. Reading expenses, probably a lot of you have, and that would be included in line 17. Typing expenses, notary fees, those are kind of obvious. If you have questions with respect to those, you can reach out to us specifically. Okay, I've gone over 23 and 24. I think those have been explained. Okay, next slide, please. Okay, this is part 3, and this is the top 5 salaries as we've gone over. Again, you are not to name names, just positions, and the salaries are to include, income, salary, bonus, commission, and draw, if that's the case. Okay, next slide. All right, this is the new section. But before we get to that, I do want to go over one other thing. The expense items that are listed in part 1, I think it's part 1, 27, 28, 30, 31, and 42. Those are the marketing, advertising, that sort of thing items. Those are further broken down and with 2 specific categories. And then at the bottom of them, I believe there is a miscellaneous part. And I'm not looking at the data call right now, but I believe that's the case. you have to recall that the reason why we have these this reconciliation part, this consistency part, is because whatever you put on line 27, 28, 30, 31, or 42, when you list them out more specifically below that, they must equal whatever you put in line 27, 28, 30, 31, or 42. When they don't, you will see that there's a difference on this reconciliation page, on this consistency page, and you'll have to adjust so that they zero out. This is where most of the problems occur that we're aware of through the years in getting these things to be accurate for all of our agents. Often they send it to us, and these are not identical. The numbers don't match. The numbers don't equal each other, and we have to reconcile them. So that's the case there. The other thing I wanted to mention with respect to this is, as Catherine mentioned, all the items that are put in a miscellaneous category in Part 3 will be sent to the DFS in raw data form. And the DFS will know exactly what you're considering to be miscellaneous. That is why it is a very good idea to include as little as possible, hopefully no expenses in those categories, and in Part 3. It should be included in one of the categories in these other Part 2 sections, if possible. Okay, that's pretty much it. Next slide. Okay, if there are questions, we would appreciate your giving them to us now. And if not, then we thank you. Hanshi, do we have anybody asking questions?
Yeah, I just wanted to thank our panelists here today, carving out some time to deliver this message to our agents. Taking a look here, nothing in the chat and no questions at the moment, but we'll give folks a moment just to type them in. If you have any questions, you can feel free to reach out to our panelists directly if you have any specific questions there.
I did want to mention one thing I forgot to mention, if I may, interject just for a second. In line 30, it's policy issuance expenses. Those are items that are losses you may incur that are not reimbursed and not expected to be reimbursed. If you pay a small claim to get rid of a small problem, and that is an expense to you that would go in the line 30 category. Also, for line 42, employee additional expenses. That would include training seminars, continuing education, gifts to employees, company outings, parties, that kind of thing. Those expense items would go in line 42. All right, that's, that might have cleared up. Probably didn't have any effect on anybody, but I wanted to make sure that I clarified that. So that's pretty much it.
Well, John, we know how much you like to throw a party, so thanks for clarifying that for all of us. So I'm still not seeing any questions. So either we've given our audience a lot to think about, or they're still trying to digest and come up with questions. I'm sure there will be. Audience, please feel free to reach out to your folks and your representative, including the panelists here. We're going to go ahead and end it. This webinar is recorded, so if you wanted to rewatch the tape, it will be posted to the Security Title website. You will receive a link in an email once this webinar is concluded. I thank you very much, and thank you, panelists.
Thank you, everyone.
Thank you.
Bye-bye.